Good morning, all. CamelbackTrading.org coming to you this Friday morning, September 16th. We are looking at window traders. Market profile of the ES and SPY, and right now, sellers who have controlled this ball game since Tuesday are right now attempting to gap lower again, take out last week's low, and possibly have an outside week down. Now, we had an outside week up last week, and we had one decent day Monday morning with it, right? So it doesn't mean it's the end of the world if you have an outside week down, or it's great if you have an outside week up. But generally, those are pretty powerful things. And since this market has been down this year, that's probably more powerful since the trend for most of the year has been down. I said yesterday there was a lack of buyers for the dividend. There was a lack of short covering not to pay the dividend. We said last night in the video the shorts are very happy and comfortable to pay the dividend out because they think we're going to get lower prices. Well, look where we are right now. So if you bought SPY right now with the dividend included, closed at $388.52. That's your break-even point, whatever the dividend was, about $1.60. Well, we're down $2.80. So if you bought 100 shares to try to make $160 on the dividend, well, now you're down $310. Just to put it into perspective. So what does that mean? Well, to me, it means that whoever bought it for the dividend, if they're not going to get paid on this dividend, they're going to just give it up earlier. Okay? So that's another reason I think we're seeing some selling here. They're just giving it up, whoever did buy it. Overnight high in SPY right now is 391.10. Overnight low is 384.53. We are, considering not too long ago, a couple of weeks, for the first time all year, all these time frames are up. Only now to have the monthly in a huge 5-month balance. The weekly going to be firmly balanced with a possible outside week down, and the daily now down. Very disappointing for the bulls, as I thought they had a chance to make some headway prior to the Fed. And so far, obviously, that's not the case by any stretch. As far as the game plan this morning, again, okay, the bigger the gap, the more I'll wait to see if we get some kind of an inventory adjustment to take a better risk-reward long, okay? That's the way I look at it. If it opens and drives straight down, that's fine. I have no problem missing it. We're going to be taken back. It looks like, again, there's 75 minutes to go prior to the opening, but right now it looks like we're taking back the trend day from July 19th. Then there's two very big focal points. There's a weekly low, another weekly low, and then the gap from July 15th. That was at 380.54, gets filled at 378.57. That's the next big target, I think, for these algos. The next weekly low after the one they're getting today, most likely early today, and then that gap. I don't look for, right now, there's no long for me right here. There's nothing to lean on. There really isn't. If they were to push down another $5 and you want to take the long the first time against the 380, the next weekly low, and then the daily low right below that with the gap, that's fine. But at this point, there's really nothing to lean on unless you expect a big inventory adjustment right off the bat. If anything, with an inventory adjustment, I'm going to be looking for a short at some point against that. We will recap these charts, all three of them, all their monthly, weekly, daily, at 4 p.m. Right now, here's the SPY chart. And again, I really appreciate the likes and subscribing to this YouTube channel. And I think you'd benefit a lot to be in this trading room for just $30 a month, which is going to be going to $40 a month for new people come January. I started this room at $20 a month 2 years ago. Whoever joined then pays $20. A year ago, I raised it to $30. Again, they stay at $30. So give you just about 2.5 months to join up for that $30, and then we're going to go to $40 for all the work, time, and effort that we put in. So here's the weekly. We had the outside week up last week. Absolutely failed at this trend line. Now there's a possibility of an outside week down. If we take out last week's low and close below it, there's a chance. Now remember, because of the dividend, if we are to rally at some point, ES could close inside of last week's range, but the dividend might prevent SPY from getting back in. It depends on, how the day goes. So just keep that in mind. But firmly balance, a 3-week balance on the weekly, and the daily is firmly down. We're going to look at a gap. We'll come look at this. All this work, it looks like we're right now gapping below it. Here's the next big target, which is that weekly gap, the daily gap down there. And again, the progression of lower highs, lower lows is back in play like it was from January to mid-June. Good luck trading today, and we'll recap at 4 p.m.